I want to take a look at this markets picture right now, because we saw that uptick coming to fruition yesterday. But as we've seen in the past, upticks on the NSE have proven to be very short-lived, with investors still pretty nervous about the operating environment at this stage. What are you making of current market activity?
Thank you, Alishia. Good morning. I think the Nigerian board has been pretty volatile in the past 2 weeks on account of a number of factors. I think if you were to observe the trend, you would see, like you rightly mentioned, that there seem to be, whenever there is an uptake, it is not usually sustained. That is attributable to the very strong bullish trend we saw in the first month of the year, and when the market gained north of 12%. A lot of the volatility and the downturn you've seen is essentially profit taken by investors, particularly on account of a number of the rescued institutions, which a good number of them recorded between 20 and 30% upside from the year start.
Victor, in this context, we've got many of the investors who are flocking towards safe plays, and many of those coming from within the fast-moving consumer goods segment. Let's take a look at a company like PZ Cussions within that sector specifically. It caught my interest when I was reading a report from Stanbic IBTC Bank, with the bank saying that it sees upside potential on that share price of 21% from the current levels. What's your take on a player like PZ?
Like you noted, there seems to be preference for stocks within the consumer goods space. Like you also noted, it's largely driven by a preference for safety. There seems to be some level of shift in demand towards stocks that would present what you call some defensive hedges against any significant volatility. PZ is one of the multinational players in the country that produces health care, home care and personal care products. I'm not quite sure that on the basis of the report by Stanbic that that there is that much of an upside on that particular stock. Because a number of the reasons for that will be looking at the underlying business trends and looking at the products and the market share. The consumer goods space in Nigeria is extremely fragmented. You've got so many indigenous local producers of this, what you could call alternative products. However, they've got some leading products that obviously hold their own in terms of what you call market share. On that note, looking at its trailing performance and where we see it going in terms of growth, both pre and post tax earnings, and perhaps even value accretion to the balance sheet, we're not particularly sure that there is that much of an upside, especially if you look at what it's doing relative to some of its competitors.
Yeah.
The industry is becoming more and more competitive, even amongst the top-notch players in that space. Notably, you've seen a lot of investment by the likes of Nestle, you've seen a lot of investment by even local other non-listed players who are also significantly pumping in investments into the space. So it's not looking as rosy as the picture being painted by Stanbic.
What kind of impact has the protracted banking sector reforms had? Because we know that it's constrained lending and consumption of white goods, and it's raised competition as well. So how much of a headwind does that still pose as the banking sector still tries to get back on its feet?
Yeah, I think the major impact that the banking crisis has had on some of those consumer plays would be from a perspective of credit extension to their suppliers and their distributors. A good number of those companies, given the fact that they are subsidiaries of international multinational groups, would typically source financing from outside the country. So even when there was a credit squeeze, you found that, as with the trend, they just made resort to parents to obtain financing, which was even cheaper, and dollar denominated from outside the country. The only risk they faced obviously was an exchange rate risk. But then you find that in terms of sales, a lot of the strategy that this companies adopted was essentially to provide some kind of credit guarantees to their bankers, who would in turn provide goods to distributors to sell, and then ensure that the cycle continued. of course, with the banking crisis, that guarantee was withdrawn, and it obviously impacted top line.
When it comes to, sorry to interrupt, but because we're running out of time, when it comes to PZ Cussions, though, and in terms of its supply agreements, there's been an announcement of a joint venture with Wilmar International, which is Asia's largest agricultural business company, to explore these opportunities in Nigeria. So what kind of, what does that partnership bring to the table? Does it change the playing field for PZ Cussions at all?
I think it does. I was going to get to that point about the operating cost profile of a lot of these companies. Margins have been strained in the past 12 months on the back of increasing costs. And if you put that side by side, earnings that have been either flat or just growing by mildly, it paints a picture where one needs to be a bit aggressive either on the cost cutting front or to look for cheaper sources of raw materials. We think that strategic partnership with the Asian producers obviously will be to leverage perhaps cheaper production costs in the east of Asia and leverage bulk movement of goods to provide cheaper either input feedstock or, as it were, finished products that could then be rebranded and repackaged and sold locally.